All right, peeps, good morning. We'll kick off the pre-market prep here for Tuesday, April 27th. And obviously, guys, a pretty nasty market. So the S&P 500, little pop here ahead of the open. The QQQ, and basically flat. So the Qs are flat, the S&P is close to flat. The Russell 2000 futures up about a third, and then the Dow Jones futures here up about 0.5%. So pretty nasty stuff, guys. And yesterday, you got names like Tesla, with a huge flush. So I think Tesla was down, 11% yesterday. So big flush in Tesla. Then you got names like Google reporting earnings last night. Big Google here is set to open up around 2270. So for us to visually see 2270, we got to flip open a weekly chart. And 2270 is going to put you way the hell down here. So nasty stuff for Google. You saw the nastiness with Netflix earnings. And then keep in mind, you've got Apple coming up, Amazon coming up. But we also had Microsoft earnings last night. Microsoft actually, with a little pop here, we're going to open up around 280. I still think it's a short. Yeah, but all in all, guys, pretty nasty market. So what I want to show you this morning are a few of the setups off of, the watch list that we're working with in the mastery. And I'm taking the trades off this watch list, in the options room as well. Not too much on the bullish watch list, a whole lot here on the bearish watch list. And keep in mind, these are all just based on the buy signals and the sell signals, which up to this point, over like 60 trades, we're coming in at close to like an 80% win rate. In terms of the month of April, and mind you, these are trades we did in the options room and the mastery. We did have a losing trade on Oxy. We took a couple losses on U.S. Steel, took a loss on Pfizer, and then took a loss on CCJ. The rest of them were winners. So I think out of like 21 trades here, 16 winners, that's like a 75% win rate. So these signals, they're money. They're pretty clutch. But in terms of how I'm finding these setups, I want to show you guys one scan here, because this is working really well in this market. Let me pull this up. And I know a lot of you have access to this already. If you don't, definitely check it out. But one scan I'm really a fan of right now, with the overall structure being so bearish, is the focus scans on the simpler scanner. So with the focus scans, and these are kind of tailored towards my criteria, we've got the daily scans, bullish and bearish continuation. And then we got the scans there for the 3-day. Now, what's interesting about the 3-day bearish continuation, there's a lot of heavy hitters on there. The S&P 500, the QQQ, names like Amazon, some pretty big stuff. But in terms of daily bearish continuation, this is one I'm a pretty big fan of right now. Members only. You think you work for the place, you get your login, right? All right, give me a second here, guys. Let me log in real quick. But I want to show you a few potential shorts here from that scan. Getting kicked out of the website here. All right, Taylor.Horton. All right, here we go. So let's fire this one up. Give me 1 second here, guys. All right, so for daily bearish continuation, we're going to want to sort by volume average. And mind you, I already did all the work last night and this morning, but you've got a few good candidates on here. So I'm going to show you guys a few of my favorites. But basically what I'm doing is, anything I get long, we have to have the buy signals, So in terms of like a few examples right now, UNG's got the buy signals. Dollar Tree actually looks really good. Dollar Tree's got the buy signals. Dollar General got the buy signals. There's a few more out there. There's Avis. And then in terms of the sell signals, They're everywhere. The S&Ps, the QQQ, even a lot of the recent leadership. So healthcare was looking pretty good, and now you've got sell signals. Right? So the only thing we're going to do here is short the bounce into the 21. The material sector, that had been showing some poise. The last Thursday, you got a buy signal, and then by Friday, you got a sell signal. And then even energy here, we're starting to see some shifts in energy. You've had buy signals, you had them since late February. Those have disappeared. We're under the 21 EMA for the first time in a month. So a lot of things are breaking down. But pretty much all I'm doing is, in the morning, the afternoon, and night, I run the scans. I'm looking for the setups of the buy or the sell signals, and then I'm putting them on the watch list. And then in the options room in the mastery, that's our plate of opportunity for the week. That's where we're looking to fish. So in terms of a few shorts here off of that scan, we actually took profits in a few earlier in the week. So, last week we had DoorDash. Just showing you this because it's a good example of what we're looking for. And again, this came from that bearish continuation scan. Under the 21 EMA, daily squeeze with a negative histogram, negatively stacked EMAs, and then you got the sell signals. So we caught a nice flush on DoorDash. In the mastery, we caught a nice short on Nike. You'll notice very similar. Negatively stacked EMAs, you got sell signals. So here you want to short it near the 21, and you're taking that paycheck on the flush. We also took profits in FedEx, which I still think has probably got more downside. It's a general statement. I think everything's got more downside. But FedEx was very similar, under the 21 sell signals, and we caught the flush. So we're looking for a bit more of that. Now, in terms of what we have open for shorts, we did short crowd on Monday. We shorted crowd on Monday in the options room, looking for a flush into about 195. So it kind of shows you the importance here of trying to short it nice and close to the 21. So we've got an open short in crowd, and then yesterday, and I think you want to keep an eye on both of these, we took a short on ITB, which is the material sector. Negatively stacked EMAs, you got red 10x bars with the sell signals, and you keep getting rejected here at that 21 EMA. But here's the importance of getting short nice and tight to that 21. Our target to the downside is, call it $55. So that's the potential reward, is the flush down to 55. The risk here, a little bit different trade to trade, but we're going to close this short if we get a close above the weekly 8 EMA, which lines up around $60.50. So, if that's your exit and that's your target to the downside, you're going to get your best risk reward. Shorting as close to your exit as possible. So say you're shorting down here at 56 and change, your reward is only about $1. Your risk, in terms of taking a stop on a shift of structure, would be a move all the way back through 60. So a little bit of reward for a lot more risk. If you can short nice and close to the 21, if you can short nice and close to your exit level, now you're risking a little bit to potentially make a lot more. And if you want to measure it, in terms of like average true range moves, you'd like to risk maybe an average true range move against you to potentially catch 2 to 3 average true range moves in your favor. So keep a close eye on that one. The home builders starts to close back above 60.50-ish. I think you can the trade under 60.50, under that daily 21. Think we could get a nice flush here. So we grabbed some ITB shorts yesterday, and we also grabbed a short on Home Depot. But again, you're going to notice they all look the same. Right? So every short that we've taken this month looks the same. In every long position looks exactly the same. Right? Same trend, same structure, same momentum. So another one off the scan results here is Home Depot. We're going to exit the trade on a couple closes above the daily 21. We're shorting yesterday around 305-ish. So there's our risk. Little bit of risk, but we're going to look for a flush into a new low. So a lot more reward than what we're going to risk to the upside here. And then you've also got the 4-day squeeze on Home Depot, which would love to see that fire short. But there's a few picks, guys, and then I'm going to pull up the watch list here, kind of go through a few more candidates. But keep in mind right now, Home Depot is a good entry for a short. As far as Home Depot is concerned, ITB is a good entry for a short. What we have to keep in mind, though, is that the S&P 500, the QQQs, the small caps, the entire semiconductor sector, the entire big tech sector, the entire financial sector, the industrial sector, the transportation sector, the communication sector, whole freaking market, basically. It's pretty extended to the downside. We're down here at like -2 to -3 ATR. So, could we just come and make a new low from here without any significant bounce? It's definitely possible. And it wouldn't shock me either. Quite frankly, I really wouldn't be surprised if we did that today. Break through 4,100. But we have to keep in mind that when, that moment in time when everything feels like super bearish, like everything's breaking down, there's sell signals everywhere, puts is the only play, volatility's through the roof. Typically these kinds of moments in time when we're down here, there's always that growing potential. You're going to get a pretty mean short squeeze. You saw that back here. That lasted for, call it, 4 days. Yeah, a little short squeeze here, right? A couple of days, but then you have this big whopper. Sucks to be short through that. So you want to be a little bit careful here because, Home Depot might be a good entry. ITB might be a good entry. I'll show you a few more good entries here. But in the event the S&Ps rally back to, even their daily 8 EMA, that's a pretty good bounce, right? Everything you're short is probably in the short term going to bounce as well. So meaning, we're getting short Home Depot yesterday with the full understanding that based on the structure, this is probably going to be a pretty easy trade if the market keeps trading lower. In the shorter term, if the S&Ps rally and squeeze the shorts, we probably end up taking a small loss here. So you really ideally would like to time the short entries on the stocks pretty much at the same time the S&Ps and the Qs are getting ready to roll over. So food for thought there, guys. And we're putting shorts on. So even with the market extended, we're jumping into ITB, we're jumping into Home Depot, but we are keeping the risk a little bit tight. But in terms of a few more options here, and again, so much of it is extended. So for a lot of these, you're waiting for bounces. But we'll kind of rifle through the names that have been on the bearish watch list here. So a few that I like are the Chinese stocks. I would like to short JD. Let me try to clean it up for you. I'd like to short JD, a little bit closer to the 21, but that came off the bearish continuation scan. We've got the position in crowd, so you could probably short that on a bounce. My preference is it rolls over and dies here. Another interesting one is Carnival Cruise Line, or Carnival Corpse, rather. I did short this. I can't suggest you jump in here. But as long as it's on the watch list, it's fair game to short the bounce. So that's a pretty interesting one. Let's see. I'd like to jump back into Nike. Nike looks like a real bleeder here. But as long as we got sell signals, for those of you in the mastery, as long as it's on our watch list, we're shorting this back at 128, 130. So looking for a bounce on Nike. Would like to short FedEx again. I think Chewy on a bounce, a strong bounce at this point. But Chewy on a bounce would be a good short. There's Under Armour. So again, the key is you got to short these near the 21. Like these The sell signals are so clutch, but they do you no good if you're jumping in down here. It's like, yeah, you got a sell signal, but getting short back here, that's not going to work. The sell signal can't fix that. But if you can take these signals, or more importantly, if you can take the watch list with these setups, and if it's bearish, have your alert at the 21 EMA, wait for that alert to get triggered, then you try to short the thing. So Under Armour is probably a good short on the bounce. There is, some of the EV stocks like NEO. Would like to short NEO back around 19 bucks. Would like to short Lucid back around 20 bucks. Rivian, short that back around 39. And as you guys can see here, a lot of these names have already made the move. Emperor Sealy's pretty interesting. Foot Locker. Keep an eye on Foot Locker today. Kind of like this one. But when you get a big flush like that in the market, a lot of the shortable setups, a lot of the names on the watch list, by the time you're down here at -2 to 3 ATR, they've kind of already made the move. But there's a few picks, guys. I suppose the ones I would give you here today would be ITB and Home Depot. We'll have to see where they open up. But they've got the good short structure. They're a little closer to the 21 EMA. But as a friendly reminder, the S&P's rip from here and squeezes shorts into, the end of the month, into the end of the week. Home Depot probably bounces. ITB probably bounces. So you really got to make sure you take that short, not only with that understanding, but then also the discipline to say, hey, if this gets 1 to 2 closes back above the 21, no questions asked, we're going to cut the trade loose. If ITB closes above 60.50, no questions asked, you cut it loose. Even if you think it's bearish, even if you still have sell signals, you've got to keep that risk nice and tight. Because as bearish as this might be, if the S&P's pulled another 2-week short squeeze, do you really want to be short Home Depot through that? Probably not. So a few suggestions there, guys. But yeah, be patient. Be mindful of FOMO. But the one trend here that I'm noticing is if you can be open-minded to look for longs and shorts, kind of off the beaten path. Like if you can kind of like step away from like the sexy shit, Facebooks, Amazons, etc. If you can just look for that good short or that good long wherever it is, there's a pretty ridiculous frequency of opportunities. So obviously I'm only one dude and can only trade so much. But I mean, since mid-February up until this point, so call it mid-February up until this point, these are all swing trades, mind you. I've got like 60 swing trades under my belt. But if you look at the names here, what we've been getting long and getting short, there's not really any Tesla. There's no Google. There's no Nvidias. We're getting long consumer staple stocks. We're shorting things like ADI and ANET, Snapchat. We're playing Altria. We're playing SLB. I even traded Aflac. If you can kind of look off the beaten path, there's still some good opportunity out there, both long and short. But there you have it, guys. That's my spiel. That's my story, and I'm sticking to it. But as a reminder, if you want to hang out a bit tonight after hours, I will be live doing the free webinar at 7 p.m. Central, 8 p.m. Eastern. A little bit past my bedtime, so I got to get a nap in. But yeah, join me tonight. We'll talk a bit more about how I'm building these watch lists, the buy signals, all that good stuff, and mainly just want to show you guys kind of a few examples of trades we've done recently to the upside. In places I've literally never looked at before. Like I've never ever looked at or traded agriculture. Like 80% of the things we've been trading lately, kind of foreign to me. But if it has the good structure, I'm taking it. Longer short. But all right, y'all, let me poke my head into the chat here. I do got to jump into the options room in like 10 minutes. So for those of you in the options room, we'll see how this morning goes. We've got the crowd short and we got the Home Depot short in the options room. But I'll bang out a few questions here, guys, if you got any. Hey, Mimi. Hey, Terry. Hey, good morning, Coop. Coop, I tell you, man. I tell you, gold is a finicky bastard. Type in the right ticker to help us. Here's what still looks really good for GLD is the weekly chart. If you want to look at this from a healthy perspective, I mean, that was a pretty aggressive move. So you're up here at like 4 ATR on the weekly chart. You know what? It kind of makes sense that, hey, at some point here in the near future, we might have to pull back to the weekly 21. Shake out the weak hands, right? Shake out everybody chasing that move, kind of reset. You got the reset. So now it's a question of, does this blow through the weekly 21? And then you really got some sloppiness here, or is this just your reset? It might take a few weeks here, but maybe gold just kind of catches its breath at the weekly 21, and then you get continuation. As long as it's above the weekly 21, as long as you have stacked DMAs, I would lean towards you're going to get continuation at some point back towards the upside. And then keep in mind, you also have the monthly squeeze here. But it's just kind of like your first little dip. Since the monthly squeeze is trying to shape up. So in terms of trying to catch the move that could unfold through my monthly squeeze, I think you still have to like the entry here. We had a trade on gold. We just kind of ran out of time. We needed 185 plus by May expiration. But yeah, Coop, I think June 17th. And I'm sorry, you got GDX. Let me look at GDX. Okay, interesting. Not quite holding up as good as GLD. Truthfully, here's the advice I would give you. With the understanding, this could go either way. Just in terms of structure, I wouldn't want to see it breaking the weekly 8 EMA here. The weekly 21 EMA. In terms of good bullish trend, that weekly 21 EMA is super, super important. Now, the best example I can probably give you is the previous trend here in the QQQ. I mean, that's exactly what we're looking for in terms of bullish trend on the weekly. Pull back to the 21, continuation, pull back to the 21, continuation, over and over and over again. Now, where it all starts to get a little sketchy is if you no longer hold that 21 EMA and then it keeps trading lower. That's when any short-term or long-term trend can start to reverse. And typically, we reverse the trend, and now we flush from the 21. We rally back to it. We flush again and rally back to it. So in terms of GDX here, I think ideally for a bullish trade, I would want to see that holding, north of the weekly 21. If I had calls and it couldn't get back above the 21, and it's always easier to give this advice than to take this advice. So even for me, this is a good kind of healthy reminder. If I had these calls and now we can't get back above the weekly 21 EMA, I'd cut it loose. Reason being is like when we're in the heat of the battle and we're holding that trade, we tend to forget just how quickly 1 to 2, solid trades can make up for those losses and keep the party going. Right. So we took a few scraps last week. Took a scrap in US Steel. I took a couple scraps here in Oxy. Then I'm hitting Nike for a profitable short. Then I'm hitting FedEx for a profitable short. Right. Then I'm hitting Carnival Cruise Line for a profitable short. We're short in crowd. Right. I think the sooner you can kind of cut the cord with something that's breaking your rules, the quicker you can kind of mentally move on and take advantage of the better setups out there. So that's kind of my general advice on that one. So Neil, the red arrow here is a sell signal indicator that we're still doing some tweaking to. Actually got an update yesterday I got to take a look at. But that's my sell signal. Still a work in progress there, Neil. Robert, at this point for energy, I'd have to lean short. Here's where it could be a tough short, though. We're still above the weekly 21. So in terms of the structure of this time frame, everything's just fine here. Stacked DMAs, green 10x bars. So I do think you could short it down to the weekly 21, around $70. That's probably where I'd look to cover the short, and then kind of take it from there. And if you're going to short it, I'd say have your exit above the daily 21 EMA. Because this is recent leadership, even though it's getting a little sloppy here, we got to give it a little bit of extra respect. If anything's going to take back the 21 EMA and keep trending, it's probably something like an energy. For now, though, I lean short. Shift of momentum, shift of structure, but I'd only want to short it down to about $70. Take it to weekly support, basically take it to daily support, take the paycheck, and then keep it moving. Hey, good morning, Rocky. Alcoa, short the bounce. So we've seen so much of this, guys, where US Steel is a good example. Oxy's a good example. I think Pfizer's a good example. Even Aflac and SLB, and to some extent even Raytheon, meaning good structure, buy signals, and then 48 hours later, we have sell signals. And without diving into everything that goes into what has to happen here to get a sell signal, one thing to just kind of understand is that only happens when both the weekly chart and the daily chart are fully aligned. So if we have a buy signal, it means the weekly and the daily, in terms of different sets of criteria for the trend, the moving average positioning, the structure, the momentum, both the weekly and the daily, perfectly aligned. When we have the sell signal, that means now moving average positioning, trend, structure, momentum on both the weekly and the daily couldn't be any more aligned for more downside. So to see that shift taking place on both time frames, two bigger time frames, mind you, overnight, it's just the kind of market we're in right now. So for Alcoa at this point, short the bounces. That's what I'd lean towards for now on that one. Andrew, looking forward to seeing you there, my friend. And you know it. You know it, Andrew. Hey, good morning, Gene. So for Exxon, so for a few of these energy names, what could work to their benefit here is that earnings is just around the corner. I mean, Gene, this kind of gets tough in terms of a suggestion for a new trade, because I couldn't advise you short it or long it, or get long 2 days before earnings. So really the best advice I could give you for now would be, we'll come back here on Friday, then kind of see how the dust settles after earnings. Let's pretend earnings isn't in a few days. What do I think of Exxon here? It's not even so much an Exxon thought. It just more so comes back to XLE. Because the trend in Exxon, right, and all the buyable dips and all the bullish opportunity in Exxon has been a direct result of the strength in XLE. Same thing goes for Devon. Same thing goes for Chevron and Fang and EOG. So there's no company-specific news in Exxon. Nothing happening here in EOG. It's not downgrades. We're just seeing the energy stocks break structure because energy itself is getting a little bit sloppy. So my best advice there, Gene, is in terms of Exxon itself. Let's come back after earnings and see how the cookie crumbles there. But I do think more importantly, you want to anchor to XLE because almost by default, if this bounces and you're back up here at $80, everything's peachy, then ExxonMobil is probably going to look great. But if XLE takes out, the lows here, then Exxon, Chevron, the whole gang's probably going to head on lower as well. But all right, guys, some good questions this morning. Always appreciate your time. I got to go heat up the coffee and jump into the gold room here in a few minutes. So best of luck today, y'all. Be patient. And again, the most important piece of advice is control that FOMO on the short side right now, because when everything looks incredibly bearish, there's usually a growing probability of a little bit of a short squeeze. With that said, we could easily plunge lower, right? So it's just kind of a discipline risk management thing. But all right, guys, hope to see you tonight. Be good. Talk to you soon.